Good afternoon, everyone. The Algo Crypto Trading Challenge 2022, the final day, will start soon. Please wait for a moment. Thank you. Hello, good afternoon, ladies and gentlemen. Welcome to the final round of the Algo Crypto Trading Challenge 2022. I'm Jackson from InvestTalk, and I will be your host today. First, I would like to thank everyone for taking time out of your busy schedules to join us today. We are excited to have all of your participate in our Algo Crypto Trading Challenge sponsored by Microsoft and co-organized by Algo Challenge Association, Algo Board Limited, Algo Gene Fintech Company Limited, FIO, Finboard Limited, and Trading PLC. Now, let me introduce the judges for today's competition. Mr. Alex Lam, Head of Quant Research at Modus Asset Management. Mr. Kelvin Chai, the co-founder of HKPTLC. Mr. Ethan Lai, Global Technology Strategics at Microsoft. Mr. James Wong, Chief Investment Officer of Lead Securities Hong Kong Limited. Mr. Jason Low, co-founder of Trading PLC. Dr. Philip Leung, Senior Lecturer, CUHK Center of Financial Engineering. Professor Yuk Fei Fong, Associate Dean, Taught Postgraduate, HKU Business School. On behalf of the organizing team, we would like to congratulate all finalists' entry into the final round. To begin this event, we would like to invite our co-founder and chairman of Algo Challenge Association, Mr. Rex Zheng, to give us a speech. Mr. Zheng, please.
Hi, nice to meet you all. Ladies and gentlemen, I'm Rex, the chairman of Algo Challenge Association. First of all, thanks to all the sponsors, Microsoft for the cloud service to store our crypto data. Thanks to our co-organizers, Algo Board, Algo Gene, Finboard, FIO, Trading Plat from Singapore, to coordinate and make this global crypto contest happen. This contest aimed to identify and nurture the algo talents in different regions and countries. We are going to build a global community of algo trading, and we are going to provide trainings to educate new algo developers. We are going to provide career opportunities by connecting talents with licensed firms. We are going to build an infrastructure of blockchain and NFT to accommodate the winning algorithms. This contest is like an entry point to the ecosystem of global algo trading. 10 years ago, I was like you, developing trading strategies all the time, and I believe that all of you will be like me in the future, having your own robo-trader, robo-advisors, or AI funds. Though you will face difficulties such as technical issues, license problems, AUM problem, please don't give up because you have the talent to solve it. Today is your big day. Please try your best to show your algo performance to the world. Thank you very much and good luck to all the teams.
Thank you, Mr. Zheng, for the speech. Now, may I invite all the guests sponsors, organizers, and students to open your camera. Here we are all on Zoom. We can have a group photo together to celebrate the day for today. Please open your camera for all of you. And give us a smile. Yeah, give us a smile. Thank you. Yeah. Thank you. Today is a good day, and we will have a good presentation for all the finalists. Keep smile, yeah, and we will take a photo and screen cap to share the good moment for today. Yeah, keep smile. Yes, keep smile. Yeah. Thanks for all of you to have a good photo today, and you can now close your camera first. Thank you. Now we are happy to move into the finalist presentations, and there will be 15 teams in total this year. Oh, it's a good and many teams to join our competition. Each team has a 4 minutes presentations and 2 minutes Q&A section. Please remark down. We will notify the team when your presentation has 30 seconds left. Now, let me introduce the first team, Import Master from Hong Kong. The team applies a combination of grid trading and R-breaker with a changeable floating rate. Import Master, please unmute yourself and share screen. You have 4 minutes to present, and you may start now when you share screen.
Can you hear me?
Yes, I'm here. I can hear.
Amazing. All right. Hi, everyone. It's my greatest pleasure to be here on behalf of Import Master. We are formed by a team of diverse university students with experiences in different trading firms. May I now proudly present our trading ideas, a combination of R-breaker and grid trading. This strategy is favorable for a volatile market situation with a frequency of 5 to 30 times a day and an ideal investment size of 10 million US dollar. So what is grid trading? In simple words, we first formulate the interval grid based on center price of past trading day, and then make a trend judgment based on the price of current and last operation, and finally make a prediction on whether to buy or sell. Easy, right? For our breaker, it's also very understandable. We first set parameters according to historical data, which is shown as the horizontal line in the graph. It started below the orange line and later break through it. If it didn't fall back, then we long. Otherwise, we short. To achieve real-time monitoring of trading price, we set up the above equation, which is composed of weight, an indicator of our breaker and grid trading. Adding everything together, that is the reference data. If it is larger and smaller than 0, then we long or short. The trading volume will also be decided proportionally to its absolute value. And here comes to the hardcore part that must be explained by our head programmer.
So in this part, we will introduce how our code works. As you can see, on the left-hand side, we provide the basic functions, including initialization and order processing functions. And on the right-hand side, it will get the necessary data from web. Then it comes to the implementation of the R-breaker and the grid trading. Our algorithm will calculate the needed information and make predictions. And after the two methods finish predicting the results, our algorithm will dynamically adjust the weight of R-breaker and grid trading by the stability of the chosen currency. After that, we will get our final prediction and do the operation. In addition, our algorithm also supports adding some risk management mechanisms when necessary. For example, taking profit, stop loss, hedging, and resource allocation. These methods can be added directly to the end of our code. We can manually set the suitable risk management method for the different currencies.
Amazing. Regarding capital management, we use exclusively the 10 most volatile cryptocurrency based on volatility and excluded trading volumes that are below 100 million. We also designed a leverage calculation method based on crypto volatility index. So all in all, how profitable it is. In our backtest results performed between September and November of 2020, our assets increased from 10 million to 11 million for 13% in 2 months. The winning rate is 53% and the Algo platform scored us 80.9 out of 100. Finally, we would like to emphasize that the combination of our breaker and grid trading acquired the advantages of both strategy to achieve high flexibility, profitability, and are applicable to the volatile markets. Thank you. This is Imports Master.
Thank you. It's now entering the Q&A section. Judges, you may begin. If you want to ask a question, you can open your mic or open your camera to ask them. Any judges have any question?
Maybe hello. Okay. Maybe I'll try one. So can you share a bit more about what are the trading strategies you've tried and how do you end up picking this one? And what's the benchmark for your back testing to show that you outperform before you launch?
I think we've tried some maybe more advanced strategies like using machine learning, but we found that because we know machine learning is always using a black box and it will like a very complex function to map the input to the output, and we notice that there's a problem is that for certain period it may give best may give some great results, but it is not very stable. So we choose to use that some methods that are traditional, but widely used and think it is very stable. So we choose the R-breaker and the grid trading method. I think you may know that, and we combine the two methods. We use a dynamically weighted judgment, and we will weight these two methods, and if one of as shown on the slides, if we think it is not stable, and we will most focusing on the grid trading predictions, not the R-breaker, but otherwise we will focus more on the R-breaker but not the grid trading.
Thank you.
Thank you. And which judges can want to ask a question?
Excuse me, may I try one question?
Thank you.
Actually, to be based on your result, okay, you use with some pair of the cryptocurrency, but does your result work for maybe for some cryptocurrency? Will be very volatile, like the Dogecoin or Super Euro. Okay, so such kind with the very fringe market. How your model, okay, fit with a different type of the cryptocurrency data?
I think maybe this model cannot make sure that all currencies can be used to achieve a very satisfied result. And maybe we should manually test which currency is suitable and which are not. For different currencies, I think the weight should be manually set for different values, not the fixed one we use here.
Mm-hmm. Okay. Yeah. Okay. Thank you.
Yeah.
Thank you, Philip Lang. And any more? If no judges want to ask, and thank you. And the Q&A section for the Import Master is the end. And judges, please write down your score for the team right now. And thank you, Import Master.
Thank you.
Thank you.
Okay, we have the second team is Algo, also from Hong Kong. The team used pullback trading strategy with long short action based on Vegas tunnel and candlestick pattern. Algo, please unmute yourself and share screen. You have 4 minutes to present, and you may start when you share screen.
Okay. Good afternoon, everyone. I am Ken, the team leader of the team Algo Man. Carson and Ringo are my teammates. We are going to share about our trading strategy. I'm going to explain our trading strategy for the long position. EMA 144 and EMA 169 are called the Vegas tunnel, which serves to identify short to medium period trends. EMA 576 and 676 are regarded as the long-term trend. If EMA 12 is above the Vegas tunnel, this is regarded as a short-term upward trend. As a result, we require EMA 12 to be above EMA 144 and 169, which are also above EMA 576 and 676. We want to grasp the chance of pullback buy. Whenever the price bounces back to the Vegas tunnel and closes with a white candlestick pattern, the system will send a long order at the opening price of the next candlestick. For stop loss, we would use the average true range. It measures the average volatility range of the price. If the price moves within the range, we should not stop out because it's in a reasonable range. So the stop loss is set to be the lowest price of the NG candlestick minus 5 times the ATR. Risk and reward ratio is set to be 1:2 for the reason of better performance after backtesting.
On the market risk and mitigation, we divided them into two parts, which are liquidity risk and regulation risk. Since new coins and small coins has low liquidity, even if we earn a lot in a short period, we might face the problem of no buyers. So we decided that we only trade Bitcoin and Ethereum since they are relatively stable compared to other coins, plus they have high trading volumes. While the regulation risk is not really something we could control, we still want to prepare for the worst case scenario. Thus, if the market moves down more than 30% under 5 minutes, all trade would be terminated immediately and trading would be stopped for a week to prioritize our capital safety. We strive to stick to our philosophy, which is don't let emotions get in the way, sit back, relax, and let the code do its things. Once we decide all the protection and coding, we will not infer anything during the trade. We also deployed a stop loss mechanism, which by trade, the lowest price of the entering candlestick minus 5 times ATR. In the short term, the highest price of the entering candlestick plus the 5 times ATR. A 10% drawdown on the trading account can be overcome with a profitable trading strategy. The earlier the stop loss is cut, the easier to gain back the losses. If we lose more than 10% of the capital, we only need to gain 11.1% to get back to break even. But if we lose more than 50%, we will need to double our money just to get back to even. So unless there's a long losing streak going on, we believe that during a 1-year time frame, we can still be in profit thanks to this mechanic.
So this is our strategy returned, and we found out that we could do better in some months. So we propose a better improvement with a better stop loss approach. So within 24 hours, if the price didn't stay within the EMA 144 or 169, we will stop the positions. For example, on the left-hand side for uptrend, we close the position within 24 hours when the price didn't stay above the EMA 144 or 169. Start from the moment we open the trade. Also on the right-hand side, for downtrend, we close the position within 24 hours when the price didn't stay below the EMA 144 or 169, starting from the moment we open the trade. So that's all from our sharing. Thank you.
Thank you for the presentation from Algo Man. Now it's come to the Q&A section. Judges, you may begin. Any judges want to ask the questions to Algo Man? Can unmute your mic to ask if you have any questions.
Excuse me, may I try another question? Okay.
Okay, thank you, Philip.
Yes. Okay. So in your trading strategy, okay, you have a stop loss. Okay, and also you did with some back tests. Okay, maybe. Okay, as you know that for the Bitcoin, it has been very volatile in maybe a few years ago. So that maybe one day to be it changed maybe more than 10% or more. Okay, have you include such data point in your back tests?
Thank you for your question.
Yeah.
We understand the Bitcoin market is very volatile, and so that we don't use stop loss percentage to stop loss, such as 10%. We use the average true range. It measures the average volatility range, so that if at that period the crypto market is extremely volatile, this indicator can take into account of this, and then our stop loss will expand. Yes, I think it consider your concern. Thank you.
Okay. Yeah. Thank you.
Thank you, Dr. Philip Leung. Any other judges want to ask a question to the team Algoman?
Maybe I try another one. I'm not sure if you report the live market return, and what did you learn anything from that period?
So this is strategy returns, and sorry, and we found out that there are some months with less fluctuation in the price, and we didn't perform better. So and you can see that on the next page, there are sometimes we didn't have a better stop loss approach, and we think that this stop loss approach can prevent some noises from the market, and we could prevent a massive loss in the future. So by using this stop loss approach, we stop the positions, we take a stop loss within 24 hours if the price didn't follow our what we think. So I think it will help get a better performance.
Oh, okay.
Maybe I can further elaborate the idea. So basically, during the market trading period, we did not implement this improvement, which is evaluation within 24 hours, as you can see right here. So improvement is that we decided to have an evaluation every 24 hours, so that we can decide whether we should continue our trade or exit our trade, depending on the price candlestick, if it's over the EMA or under the EMA, as you can see in this long position and short position chart.
Okay, thank you.
Thank you. Okay, if any other judges have any questions for the team Algoman? If no more, okay.
Hi.
Anyone want to? Yes, James.
Yeah. Hi. I'm just curious. How do you get that number, the coefficient 5 in front of the ETR? Can you walk us through the process of you getting that number?
Thank you for your question. We have done several times of backtesting using different parameters. We have tried different dimensions and different number of average true range to be the stop loss. At the end, we find out that ATR of 5 times is suitable for the Bitcoin market. Yes, that's why we use the 5 times. Thank you.
All right, thanks.
Thank you. And thanks all of the questions from the judges, and the Q&A section for Algoman is ended. And judges, please write down your score for the team Algoman. And also thank you for your presentation, Algoman. Next, the third team is Bovins from Hong Kong. The team used micro take profit strategy with long short action based on moving average. Bovins, please unmute yourself and share your screen. And
Hi,
you
could
have
you hear me?
Yes, we can hear. And you have 4 minutes to present, and you can start now.
Okay, I will share my screen.
Yes. Okay.
Now I'm going to do a brief presentation about our trading strategy. I'm representative from Bovins Holding. And here is our overview of our presentation. Firstly, I will talk about trading idea description, and then I will move on to implementation detail, and then I will talk about risk management, and lastly, this is our chain biology. So firstly, our trading idea is very simple because we believe simple is the best. Our basic trading idea is following the trend. That means when our indicators suggest that is an upward trend, we will take long position, and that is a downward trend, we'll take short position. And making sure we can take profit from every trade means that we will set a reasonable take profit level to make sure we will try our best to touch that level and take profit from every trade. Yeah, and I will talk about our financial instruments and data selection. So our portfolio contains BNB and Dash, which are regarded as lower and higher volatility. But in the live test, we use Bitcoin and Ethereum because we feel like they have a higher liquidity during the back test markets. And we use an hour interval historical price data in backtest and for our technical indicators to make predictions. And now I'm going to talk about our details. So the conditions of opening a trade. So as you can see in the slide, for opening a short trade, our conditions is that only our technical indicators suggest that is a downward trending. And I can reveal that our technical indicator is only moving average, but in my presentation, I will not talk about our parameters because I believe different strategies have different parameters, and different instruments may have different parameters. So we use an optimization method to suggest our parameters. And our conditions for closing position is only subject to the time limit and take profit limit. Let me illustrate that. Time limit means that we will set a maximum hold time to every trade, and take profit limit is we will set a reasonable take profit limit to try our best to make the trade will touch their limit and will take profit from every trade. And as you can see in the long trade, the condition is conversely. And our trading result is also impressive. As you can see in 2020, our annual return rate is nearly 300%. And we use 2019 as a training set. We feel like 2019's annual return is also above 200%. So that strategy definitely works. And you can see the Sharpe ratio is also very impressive. We use 6 times leverage, but we are not afraid of that high leverage because our risk management method is very useful. Then I will talk about that. The basic tool method is we set limit to every order. That means a take profit level to stop their order when you can take profit. And time limit, we set maximum hold time to 4 hours, and that can make our risk manageable. And other tips include hedging and a diversified portfolio, and high frequency trading means that we trade frequently and set a reasonable maximum hold time. And I will set stop loss to our order sometimes. And lastly, I will talk about my team. We are a team from CUHK, and Bovins is a British slang, means scientist. That shows we devote ourselves to research into strategies. And in our team, Bao is responsible for financial knowledge, and me, Huding, and Alicia are responsible for optimizing and writing codes and do the plenty of backtest. Here's our presentation. Thank you very much.
Thank you, Bovins. And now move to the Q&A section. Judges, you may begin now. Any judges want to ask the question to the team of Bovins? Can unmute the mic yourself and ask.
I still want to ask a very basic question. I know that you decided the simple strategy is better, but can you walk through the journey of how you arrive in that conclusion, or is this based on your belief? Thank you.
Oh, of course. So firstly, our team consider a similar strategy like this. That is our basic idea is following the trend, but we use more complex indicators. Like we try to use some time series model like a Riemann model, but we didn't get a very good approach. And someday I feel like, oh, we can set a take profits to every order that makes sure our trade can take profits. I won't say sometimes, I will say try to take profit most of times. So you have a relatively higher winning rate, right? So we just add a take profit to our order and do a very simple modify to our technical indicators. Then we achieve a very good result. Then our process that becomes try to modify our parameters. So we introduce a optimization method. Then finally we get our strategy.
Thank you. Do you try to focus on the down market period to see how the strategy performed?
Of course, I think downward trending and upward trending didn't influence our performance, because when downward trending, we open a short position, right? You can still take profit from short position. And when the whole market is downward I would say in some months or a period of time, and it is still some upward opportunities and downward opportunities. We just break into some small trade because our maximum hold time is only 4 hours. So actually the trend of a long period doesn't influence our performance. Do I answer your question?
Very well, thank you.
Thank you. And any questions for the team's Bovins? Any other judges have the question?
Excuse me, just a simple question. Okay. Okay, in your strategy, okay, in your back test, okay, you use the Bitcoin, okay, and Ethereum in the back test. How the liquidity affect your strategy? Have you tried the other less liquid, okay, cryptocurrency in your back test, and how about the result?
Yes, of course. Actually, in our back test, my instruments are BNB and Dash, because I feel like the bid and ask price, the difference between bid and ask is relatively small. So in our test, we will try to find the instruments that have a relatively small difference between bid and ask price, that we can try to reduce the difference between them. That is, we can try to reduce the loss. And so BNB and Dash is definitely less liquid than BTC and Ethereum. And we also tried other instruments, but we feel like given our strategy, we still prefer a higher liquidity of the instruments. Can I answer your questions well?
Mm-hmm. Okay. Yeah, but a follow-up question is that actually in cryptocurrency, the one we can make profit is for the less liquid currency. Okay, as you know that Bitcoin and Ethereum right now is quite stable, their price. But if you want to look at the profit, we need to focus on the less liquid or less market capitalized cryptocurrency. I think this is my opinion. Okay.
Okay, I got it.
Thank you. If no more questions, we move to the next part. Okay, thank you. And the Q&A section for our Bovins is ended. Judges, please write down your score for the team now.
Thank you very much.
And thank you. Thank you. Up next, the fourth team is CMM from Korea. The team executes trade based on candle patterns and order block, trading volume per each trade determined by previous trading history, increment on loss and reset on profit. CMM, please unmute yourself and share your screen. And you have 4 minutes to present, and you may start when you are okay.
Good afternoon. This is Team CMM, and we will begin presentation now. Okay. To begin with the executive summary, our trading logic utilizes famous technical analysis tools such as order block, candle patterns, and RSI divergence, and risk management system based on what we call the gamble factor, which will determine the trading volume for the next trading or the pending trades by the success or fail of the current trade. So basically, our trading logic will keep incrementing trading volumes every time we lose by the amount of the gamble factor, and reset trading volume to the initial state when the current trade ends with a profit. Through trial and error, we found out that the optimal gamble factor for the year 2018 to 2020 was 2.0, and here is the backtesting results. So overall, the ROI was around 50,000% from 2018 to 20, and if you look at it with the equities drawdown, Notice after significant loss in the first 2 to 3 months, which was around -30% at maximum, latter trades were quite steady and this we believe is due to the nature of probability that as we begin to have more and more collateral, the logic becomes more steady as the trading volume by the gamble factor is less risky in terms of leverage we utilize from the whole collateral we would have in our hands at that point. And this is the overall score we got from the algorithm backtest. And moving on to cheating idea description. From our initial proposal, we only actually implemented 4 out of 6 TA strategies after running backtests for all possible combinations. And this was the best return for the year 2018 to 2020. And since we were using 1 hour time frame, which do not fit some TA models like order block, we adjusted the rules for such methods to our own taste. And this is the adjusted order block logic. We use custom target profit and stop loss, and we also didn't implement the trading volume for each candles. And for the candle patterns, our initial idea was to implement all top 10 most famous patterns, but it turned out that when we used only engulfing and harmonic cross, it gave us the best return for year 2018 to 2020. And for the RSI divergence, we combined them together, and this RSI divergence, I believe, is also a publicly known trading strategy, and we use this in our model. And we discarded Fibonacci retracement and CME gap as they did not give us the optimal return when combined with other strategies. Moving on to trading logic, this section explains about the gamble factor mentioned previously. And as I mentioned, it is the multiply constants to the trading volume. So again, when the trade ends with a loss, the next trade will have a trading volume of the previous trading volume times the gamble factor. And whenever the profit is made, the trading volume for the next and all the pending order will be set to initial trading volume. And for the implementation, the whole process followed this structure. We first write our logic in a platform called TradingView, and we debugged our logic in the live market through Discord webhook alerts as we could not monitor the chart 24 hours. And also we got some public built-in written models in PineScript, which is a TradingView language. And lastly, we put those PineScript models into a Algo's Python code for the final backtesting. Yeah, and this is the end, and I will move, and I'll leave the Q&A section to our teammates. Thank you.
Thank you for your presentation. And now it's moved to the Q&A section. Judges, you may begin. Any judges want to ask a question to the team CMM? Can unmute your mic to ask it.
Hi, Kelvin here. Could you explain more about what is the order block?
Well, for the order block, we basically see for the first candle pattern, like the candle pattern right now, if it is, like say, bearish, then we keep that in mind and look for the coming 6 candle patterns. If they are the opposite, then it is a order block. And we think it is a very strong trading signal because with combination of the engulfing candles, especially at a 1 hour time frame, say if we have a bullish order block, we are very certain that it will make a profit for sure. So it is the main idea behind our trading strategy.
Okay, so order block is still about candlestick patterns instead of order or volume, right?
For our strategy, we just look at the candle patterns.
Okay, thank you.
Thank you. And any other questions from the judges? And you can unmute your mic to ask now.
So I'm not sure if I fully understood the presentation on equity drawdown. So can you tell me, so at the lowest point, how much money you have lost? So that's a minus 30 something percent, or it's just minus 30% something percent on a particular day?
It should be the percentage of our total available cash.
Okay, thank you. Okay, got it.
Thank you. And any other more questions? If no more, the Q&A section for CMM is ended. And judges, please write down your score. And also thank you for your presentation, CMM.
Thank you.
Now we move to the 15th. It's Crazy Kong from the United Kingdom. The team use crypto market index trend following strategy with long short action based on moving average, convergent, divergent, and stochastic oscillator. Crazy Kong, please unmute yourself and share your screen. And you have 4 minutes to present, and you might start now.
Hi everyone, thank you very much for this opportunity. So we're Team Crazy Coin. So I'm Wei. I'm collaborating with my teammate Kai. So I'm a research mathematician from Imperial College, London. And then Kai is a computer scientist working on blockchain technologies, also at Imperial College. So yeah, let me first just run you through our trading idea. So our main trading hypothesis is that the whole market is highly correlated. So we decided to basically trade the market via a market portfolio at the crypto index. And then we basically used a very simple strategy, which is a trend following strategy, moving average, as some of the other teams have already mentioned, and apply the trend analysis to the market index. And we wanted to back that up using some deep learning method. So this the sentiment analysis applied to Twitter data. But however, we had this implemented, but it was very, very difficult to incorporate this into the Algo platform. So in the end, in our final deployment, this was not deployed. Hence, it's grayed out. And then the buy and sell actions were, of course, limited by the risk management side and as well as the capital management side. So basically, to summarize, the long-short action is based on the moving average, convergence, divergence, and also momentum indicators applied to the market index. So there are many different ways of defining the market index. We actually went with an already available one, which is called CCI 30, so cryptocurrency index 30. So this is a company, I believe. So we use their data. But however, their data is only available in daily frequencies. So that's what we had. And then these other things at the bottom are to do with the sentimental analysis, which were not actually deployed in final phase. So this is the data from CCI 30. As you can see, it's very, very, very stable because it sort of takes the whole whole market. And then at the end period here, I guess this is the live trading action testing phase. So everything's going down. It's not a good period for crypto markets at currently. So we got a very, very low trading action in the final performance. So the risk management side, we just used a dynamic stop loss, which is supported by the max drawdown. And then for capital management, we actually found a formula from a research paper. So basically, for each trade, the volume is defined to be the amount of available capital multiplied by your risk percentage divided by the max drawdown level. So these parameters have to be tuned. And then in our back testing, we got a very, very high robustness score, mainly due to, I guess, the stability of the index. And these could be tuned further, but due to the limited time that we had, it's the best that we could do. So if you're interested, the methods and ideas were from these 5 papers listed here. And it's the end of my presentation, and I'm happy to take any questions that you may have.
Okay, thank you for your presentation. And now we move to the Q&A section. Judges, you may begin now.
Excuse me, just a question for you. In your presentation, you mentioned with some crypto index. Okay, so and in your back test, okay, what component or what is your portfolio in your back test? Or you trade the index, or you did some other components in your back test?
Yeah, so we only had, well, due to the competition rules, we were only allowed a subset, right? We had a very narrow number of assets to trade. So we only looked for we only traded assets that were in the definition of the index. Mm-hmm. So yeah, so not everything, but only what's available. So this company on their database, it tells you what constitutes the index and their percentage. So Bitcoin consists something like 20% of the overall, I guess, which is also why, as you mentioned earlier, it's a very stable thing. So to get better profitability, you'd need to look for low liquid. I totally agree with you, but we weren't. That's also was written in our proposal, but we weren't able to get to that stage due to the limited time that we had. Thank you.
Yeah. It's a follow-up question is that for this index, okay, you mentioned that when the index goes down, okay, so that you will consider the market of the cryptocurrency is not very good, okay, but actually, okay, if you look at the cryptocurrency market, if you just looking at the index, you may lose out with some winner in the cryptocurrency market. If you look at the Kraken, okay, one of exchange, there is some time with some currency may have increased by maybe 20 or 30%, but some other currency may drop with about.
I totally agree. Yeah. I totally agree with you. I mean, in our proposal, in our original plan, we wanted to basically use this index as a backbone, but at the same time allocate some of our assets to look for, I guess, assets that are negatively correlated. So whenever the index goes down, we look for, but then we didn't have time to get to that stage, unfortunately.
Okay, thank you.
Thank you. Any other judges have the question to the Crazy Con?
Just one quick question. Thank you for sharing. This is very interesting. I think this is the first team talking about using the news and social media data, not just the index data, to try at least, right? To try to do some sentiment analysis to predict the market situations here, right? So understand at the finally you doesn't make it, right? Okay. Would you mind to during the process of evaluations, we might share the lesson learned, okay? Why make it fail, okay, for the marketing sentiment analysis, features analysis?
So this we actually used a pre-trained deep learning model, but then it was very hard to get Twitter data onto Algo gene. So there's the actual deployment of this was very, very difficult. But the whole sentiment analysis, basically, it looks at Twitter feeds, looks for keywords, and then it provides a number that tells you, and then we wanted to use that as sort of like a cross reference against the trend feature.
Exactly.
And to just So that's what we wanted to do, but we weren't able to incorporate it successfully. And then because we both have job commitments, so we didn't have a lot of time dedicated to this challenge, unfortunately.
Thank you for sharing. So what you think is it's possible to further develop later on if you have time and resources to try to develop
absolutely,
right?
It's a learning experience for us.
Exactly. Try to relate the trading features between the sentiment as well, right? Okay, break one.
Thank you.
Thank you, Ethan Lai. Any other judges have the question?
Just a quick one. I think just now Ethan may have prompt you to say that. So given more time, right, what would you have done differently? I mean, if you have given enough time in your context.
I certainly would have tried to carry out the to look for assets which were that would have performed perhaps have a negative correlation with the actual index. So the index would provide like a more stable profit, but then we want to take some risk by looking for. So that's something that I certainly would wanted to have done, but unfortunately we couldn't. And the main challenge we found with this whole thing is the parameter tuning. So that was very, very time consuming. Even though we went with I guess a relatively simple strategy, it's still trying to, for example, set the stop loss in order to ensure positive expected return. It's not so easy. So yeah.
Okay, good. Thank you.
Thank you.
Thank you. And the Q&A section for CrazyCon is ended. And thanks all of the judges. And you can write down your score for the team CrazyCon. And also thank you for the presentation of CrazyCon. And now also thank you for the previous 4th team for the wonderful presentation. Now we will have a short break. Welcome back, and we are now moving to the presentations again. And the 16th is Epsilon from Mexico. Would you please unmute yourself and share your screen? And you have 4 minutes to present, and you may start now. Thank you, Epsilon. Hello, Epsilon. Are you here? Or maybe they missing the presentation today. No problem. We are moving to the next team first, and we wait the Epsilon maybe moving back later. Now, coming up next is Invin Execution from Hong Kong. The team applies the pricing strategy based on the technical analysis of moving average, convergence, divergence indicator, and channel momentum oscillator together with the help of other statistical tools, historical news data, and Google top search results. Invin Execution. Please unmute yourself and share your screen. And you have 4 minutes to present, and you may start now.
Good afternoon, contestants, judges, and guests. My name is Jerry, and thank you for giving me an opportunity to join this pitch sections. Before we start, I would like to introduce my teammate to all of you. We have Doman, Hermia, and Wendy, and we are all engineering students. So without any further delay, let's move on to the main focus of today's sections. And Doman, please.
Thanks, Jerry. In the upcoming parts, I would like to share the executive summary of our trading idea with all of you. First, our algorithm aims to identify several entry signals by a chain momentum oscillator and a moving average convergency divergence indicator of the cryptocurrency market. It followed by computing a volatility testing to indicate whether the risk of entering the market and requesting an order is manageable or not. An order will be placed if the result has shown that the probability of making the profit is much greater than making a loss. In our algorithm, the corporate announcement of supported brokers, Google top search results, historical news data, and GTP are used. You may wonder how our team has come up an algorithm like this. It seems to be quite ordinary. However, our idea has made use of the bidirectional causality between the crypto trading and the GDP. We will try to explain to you in the next part. And Hermia, please.
First, Doma, as mentioned before, our team used two price oscillator to generate entry signal. We aim to confirm the exact pricing trend by using historical news data and Google top search result. After receiving an entry signal, volatility testing is conducted to analyze whether an order should be placed or not, as the price of crypto could shift in a cumulative time interval. Our test uses machine learning to detect the news that may affect future pricing trend and set up a score for each detected event. The score is ranging from -1 to +1, and an event will have a positive score if it could make the price to rise. The graph here has summarized what statistics are tested before proceeding to the price prediction stage. Once the test is passed, our price prediction stage uses a multiple linear regression model to elaborate the relationship between the future price and the number of related events. We will place an order at the current price and another order at the predicted price to make a profit through our price difference. Our algorithm would work for both short-term and long-term, and Wendy will explain our long-term trading idea. Wendy, please.
Thank you, Hermia. The bidirectional relationship between crypto trading and GDP is confirmed by research conducted early in this year. We have rearranged the given equation and uses the corporate announcement of supported brokers and GDP as the main variables for predicting the future price. The predicted price here is set as the expected price a few months later. Until now, the algorithm has been completed. In fact, it has a satisfactory performance in our backtesting. The average monthly return is believed to be positive and is deployed into the real-life market. Nonetheless, our algorithm is far from perfect. The sudden collapse of cryptocurrency market will be the worst scenario faced by our algorithm, such that a loss is very likely to occur. Regarding this weakness of our algorithm, precision checking is performed twice a month to ensure the position of all subscribed instruments will not be too large. We have found out that there is usually a loss occurred during the early stage after the algorithm has been deployed. This loss is estimated to be lasted for 1 month and is believed that there is a large number of unfilled orders and is the major cause of this loss. Further capital might have to be added for preventing the initial loss to be greater than the initial capital.
30 seconds left. Okay, thank you for your presentations. And now we move to the Q&A section. Judges, you may begin. Any judges have the question to the team in execution?
May I ask what's your trading frequency that you are using GDP as a factor to predict the market trend? Is it
Yes. The method of using the frequencies will be around once a month or twice a month, because GDP is actually not will be announced by the government or other organizations around quarterly. So the frequencies will not be too much, will not be too high, for examples. So we found that in our backtest, the frequencies will be around once per 2 weeks. So hope this answers your questions.
Thank you.
Thank you, Professor Fong. And any other judges have the question to the team in execution?
Hi. Just want to ask the team, I think, with looking at your live returns, so what do you think you have done right, and what do you think you can do it better?
I believe our algorithm has correctly predicted the pricing trend, and the strategy is quite good at to earn the price difference when we are doing the trading. But our team have observed that the strategies can be improved in a way. Can be improved. As you can see, this first month of our backtest performance is actually has a loss, and this loss is actually because of the we will place orders and wait until the orders, and the profit will be made until the orders have been completed. So the first month, we have to be very carefully to deal with this loss, because the loss may be greater than the initial capitals we place in our account. So this must be the strategies could be improved such that the loss in the first month could be reduced.
Okay. Thank you for the question from Mr. Jason. Also, any other judges have the question to the team?
Hi, this is Kelvin. Maybe I missed. Did you use the Google top search result as you mentioned in the beginning of your presentation?
The Google top search result is actually quite similar to the use of the news data. We are performing a sentiment analysis to identify the trend, the expected pricing trend of the cryptocurrencies. So we detected the number of crypto-related events or news, and we will count the number of Google top search results which are related to the cryptocurrencies market, and then if the fatality testing is passed, then the linear regressions will be performed and place an order. Hope this answers your questions.
Okay. Also, thanks for the question from Kelvin, and also thank you for your presentation in execution, and the Q&A section for you is end. And judges, please write down your score for the team now. And also thank you for your presentation in fin execution. And now we move to the eighth team is IT Doge from Iceland. The team used a long-short strategy based on LSTM return prediction integrated with sentiment analysis. Would you like now please unmute yourself and share your screen, and you have 4 minutes to present, and you may start now.
Hi everyone, we're IT Doge. We are a group of students from HKUST actually. So let me begin by introducing our strategy. It's a portfolio optimization using LSTM, price prediction, and economic data and sentiment analysis on news. Due to time constraints and we have heavy academic or workload, so we changed this to long short-term strategy instead. We chose a basket of crypto perpetual futures, and this is based on here. So we categorize them into some of the mainstream blockchains. These are relatively stable. Some are growing and they might be a bit more niche. And all of them have different functionalities. And we believe fundamentally they are driven by different group factors or are affected differently by bad sentiments in the market. And one other thing is why we use LSTM, which is a machine learning model to tackle time series, is that we believe the day-to-day price movement is stationary and they have approximately zero mean. But the crypto market is very responsive to news, and also risks are sometimes probabilistic. Some people just trade based on how others trade instead of how the instruments actually behave. So we want to use this machine learning model to figure out patterns in the market for us. Here is our implementation details. As you can see, this is the trading day. Each trading day, I will zoom in, and you can see how we treat these data. First, we have the trading data going in here, and we have a factor generator to generate financial factors for us to input into the LSTM. In particular, these include things like price, volume, and simple and exponential averages, and all sorts of factors. Here we have the news data, and in particular, we use a Hugging Face transformer to extract financial keywords. And also we give out scores based on whether this news is good or bad, and how it affects different assets separately. Also, we have macroeconomic data. We listen to some economic time series, factors like GDP and also other unemployment rate, etc. So here you can see this is during our primary testing, not in the Algo engine. And you can see the price prediction is it tracks the actual price closely, although there is some time lag and sometimes a bit off because maybe the coin reaches its historical high or low. But we believe LSTM as a technology cannot be wrong. So what is left is we have to tune the trading mechanism, capital and risk management to be right. And here we reference a paper. So this is also the factors we mentioned before. Things like price, volume, hash rate, they all affect the performance of crypto assets. And below is a list of macroeconomic factors. Our NLP, our sentiment analysis, serves as a proxy of fundamental analysis because we can't trade manually in the competition. But what we can do is we approximate with some fundamental, with some sentiment analysis.
30 seconds.
Okay, moving on, we have some capital management here. And also in terms of risk management, we see that some cryptos have performance issues. And as we all know, there are a lot of assets like Terra or FTX, and we can't predict all of them. But what we can do is we try to set some stop loss, and also we have take profit limit, take profit level. And that's all. Thank you.
Thank you for your presentation. And now we move to the Q&A section, and judges, you can ask your question to unmute your mic. Any judges want to ask a question to the team IT Doge?
I saw your slides. You mentioned expectation for real life implementation. You would like to rebalance the portfolio weekly. Can you elaborate on that?
Yes, thank you for your question. Firstly, originally this slide we planned to use portfolio optimization. We didn't have time to change the slide deck. Later we changed to long short, and we set a time frame of about every 2 days, and then we changed the long short pattern. Each time we long short 5 best assets, long the 5 best and short the 5 worst. And I'm sorry that we haven't changed the slides. Yes.
Okay.
Okay, thank you for the question from Jason. And any other question?
Excuse me, maybe let me try a question. To be in your strategy, okay, you make use of the news, okay, this is quite useful. Okay, how do you make use of the news to trigger your dynamic of your strategy? Okay, for example, if you certain here, they may be some the Elon Musk, okay, they have the news, they hold with the Dogecoin. Okay, will this how it affect your portfolio, or how frequent your portfolio will change? Okay, is it dynamic, or you just fix over a period, say once a week, or it will change dynamically?
So thank you for your question. First of all, our sentiment analysis helps us tackle the news. Let me see the slide here. Our sentiment analysis takes in some news from the data feed in Algo and outputs some score of whether how much of this contribute to good news, neutral, or bad market perspective. And then this is inputted into the LSTM as a factor. This model is again a pre-trained financial model. And as we train, we realized a major problem associated with this is that it is not so customized to the crypto market, where people may use specific wordings, or there are some very special interactions. For example, Binance and FTX are strong CEX, or they are also opponents to each other. And also, we only use the data from Algo, and instead of scraping real-time news or Twitter feeds ourselves. And I think this is a major disadvantage or considerations we haven't thought of. So the news sentiment analysis didn't play out too well, I would say.
Okay, I see. Okay, thank you.
Thank you. Thank you, Philip Leung. Any other questions? If no more questions, and also thank you for the IT Doge. The Q&A section for IT Doge is end. Please, judges, please write down your score now. And also thank you, IT Doge. Next, the ninth team is Lazy Chicken from Hong Kong. The team used resistance and support theory for technical analysis, where we assume a weak rebound cannot break an intense dump. Lazy Chicken, please unmute yourself and share your screen, and you have 4 minutes to present, and you may start now. Lazy Chicken, you can start your presentation.
Okay, good afternoon. This is Lazy Chicken, and we'll begin our presentation now. Our team came from HKU, and 2 members have multiple backgrounds in crypto, finance, and data fields. And here is our executive summary. Our strategy is basically based on technical analysis and trade the resistance and support level. The intuition behind is about human psychology and price move observation. This strategy applies to all markets, but the pattern is especially workable for crypto. And as for the data input, we use the price move, volume, etc. to generate the trading signals. We identify the following patterns. First, a sharp up move reaching a pivot and a sharp down move hitting the bottom. And this is followed by a slow recovery to the previous high, where we will generate the signal to short the corresponding cryptocurrency. And the detailed measurements of sharp move and slow recovery are adjusted and optimized during the strategy development. And also, we develop a stop loss mechanism to deal with risk after each trade. If the current price is 3% above the previous high, which is the price we enter the trade, and the particular short position will be closed. So the worst case is about losing 3% on a trade.
So there are 5 good things about this strategy. The first thing is it's generally applicable to all crypto futures. So we have around 150 on Binance, which means we have a large space to trade. So like single name position, average trade minus 10% turnover equals 5%, which means the price impact can be low. And also the strategy capacity is high because we have a lot of trading assets, and also the funding liquidity management. Also we are running something mid to low frequency trading because based on our back tests, it works better on the mid to low frequency trading, which means around like hours to days. And we don't have a minimum capital requirement. And we perform back testing with our own engine. So we wrote a back testing engine based on Python by ourselves with our own data. And we did some back testing. And if there's no trading cost, we realize that if we shorten the trading time span, it's going to be better. So for example, minutes trade, then the whole the P&L line was going to be a stable uptrend. But because the trading cost is quite high, so we decrease the frequency, then something will happen like this. So this is one of our parameter tuning. We traded all the assets, and you can see this is the P&L line. It holds for around like 3 days for a single position. Yeah. And this is our live market performance. So unfortunately, it's not a very stable uptrend, because at the very beginning we thought it's gonna be, we don't have trading costs, price impact, so it's gonna be just same as back testing. We're gonna have a stable uptrend, but actually I think when we are actually trading, the system has something more like a trading cost. So we have you see, like, except for some extreme conditions, such as what happened this day. So this sharp up move is the day the FTX collapsed, but like after that it's going like kind of like stably downward. But this is because there are some technical issues, and if we cannot like ignore this trading cost, we can just prolong the trading time span. Yeah, next page. Yeah, so basically this is the additional comments just wraps what I just said. So basically, according to our research, this strategy works the best with 1 day to 1 week time span with decent return Sharpe. But in the contest, there are some technical problems, but we still get a positive return at the end of the day. And we can further enhance this by some momentum indicators and some dynamic stop profit. Yeah, but the drawback of this strategy is if there's some very low liquidity stuff, liquidity crypto, there's some we need a stop loss, and it's pretty tight. Yeah. Yeah.
Okay. Thank you for your presentation, and move to the Q&A section. Judges, you may begin.
Maybe I try to ask one question, because I see your executive summary is saying, using the very, very interesting wording, human psychologies and flies move observation in here, right? So as after you explain here, right? So I don't feel any psychologist factors in there, right? Is it true? Or can you elaborate a little bit more?
I see. Yeah. So I think sentiment is definitely one of part of the game, but we mean psychology here. That means like in a traditional stock market, we did some back testing, and we saw this kind of trading strategy doesn't work as good as crypto. So I think that the psychology means those retail traders, when they see a potential breakout, they're gonna chase, but it's gonna dump. So this pattern will be produced by human psychology.
Okay. Okay.
Thank you, Mr. Ethan Lai. And also, any other judges have the question to the team, Lazy Chicken? If no more question, the Q&A section for Lazy Chicken is ended. And judges, please write down your score now. Thank you for your presentation, Lazy Chicken. And next, the 10th team is Nothing from Hong Kong. The team's strategy is based on the correlation with last market, gold market, and interest rate, and the mean reverting property. Nothing. Please unmute yourself and share your screen. And you have 4 minutes to present, and you may start now.
Thank you getting this chance to share my trading idea. My idea is simple but quite special. Is I don't model the crypto price from its historical price or information. I try to model the crypto market from other investment market. I observed that the crypto price is correlated to the stock market, the gold market, and the interest rate. So I try to construct a portfolio to replicate this one, and then take the difference from this replication and the true crypto price, and prove that this difference is a stationary time series. So it is mean reverting, and based on this mean reverting property to derive the trading strategy. So for the replication portfolio, I try to model the Nasdaq stock index, and also the gold price, and also the interest rate, and take the log, and then use a linear model to model it. I try to add a constant to the interest rate to avoid locking on the non-negative, non-positive value. The regression test for seen and unseen data is plotted here. So I try to prove the difference of the prediction of the linear regression and the actual true value of the crypto price to be a stationary time series by the ADF test. The trading strategy is very simple. Try to get the price data from other markets, then apply the linear regression to get the prediction value, and then take the difference. So the difference, if it is higher than the mean, then issue a buy signal. If it is less than the mean, then issue a sell signal, because we predicted that the difference will return to the mean. So I try to find out which crypto price will have such mean reverting properties. So I choose 4 crypto and run some backtests using the year 2020 data. I do not include the regression training set in the backtest, so it is totally unseen data. The Sharpe ratio, the annual return, win rate, fairly good, although not very high when compared to other strategy. What I learned from the live test, although it is not very good, is the algorithm will use the data of the last 500 trading days to run the regression. That may derive from the rest market a lot. So I will thinking some enhancement to improve this strategy is I can use some econ data with smaller time granularity, let's say 1 minute. It can be closer to the current market. For example, use the bond yield to represent the interest rate, use the 1 minute, the price from the stock market, etc. Besides, for the trading just on the crypto market, it's just one leg. We can also take position on the stock and bond market as a cross.
30-second leg.
Finally, just very simple risk management is I try to bound the capital for buy and short, and then and also allow a short selling in order to capture the short the position. So that's it for my presentation. That's it for me. Thank you.
Thank you for your presentation. Now we move to the Q&A section, and judges, you may begin to ask now.
Excuse me. In your regression model, okay, you take the log of the Bitcoin, okay, price with the log of some other variable, like the last step, okay. Why you use log in your regression model?
It's just to make the scale, rescale the numbers, the factors to more or less on the same level. In fact, we can also use a min-max or some other scalar. So I just don't want to make the value to be a factor to affect the modeling.
Yeah. But if you use log in your model, okay, that means the Bitcoin price is equal to the product of the corresponding factor, okay? Am I correct? If you take exponential on both sides of the equation, so that you get Bitcoin price is equal to A0 times lambda to power B1 times something like that. So that is a multiplied model instead of a linear model.
Yes, that's true. That's right. Because I just try to model the correlation, so I didn't consider these factors. But maybe we can try. Maybe this is one of the way to model the correlation. We can also use the min-max. So that it can become a to rescale by min-max, then it become a really linear model. Yeah.
Okay. And another question is at the end, at the last slide. Okay, you say you have some short-term strategy for the cryptocurrency. Okay. Maybe my knowledge is not too much. Okay. How do you short the cryptocurrency? Is it available for short cryptocurrency in the market right now?
Sorry, because maybe I used the same terminology from the stock. Just the crypto is a conversion from, for example, USD. Then short mean on the other direction to buy another side.
Okay, I see. Okay, thank you.
Thank you for the question. Any other judges have the question to the team? Nothing. If no more, just thank you. And the Q&A section for Nothing is end. And judges, please write down your score. Also, thank you, Nothing, and the previous 4 team for the wonderful presentation. Now we move to have a short break.
邁向10年發展 ，Topus 由最初照顧 Single Family Office（SFO） 到今日嘅 Multi Family Office（MFO），一直以嚟，我哋都為家族辦公室客戶、高淨值嘅私人同埋機構客戶提供全方位嘅財富管理、風險管理以及家族傳承等等嘅服務，致力保障家族財富，同時亦做到財富增值同財富傳承。
Topus 由創立到而家嘅定位一直非常清晰。我哋係以家族資產嘅長期利益同埋發展作為終極使命。Topus 嘅家辦服務團隊包括律師、會計師、 投資經理同埋升學顧問，提供稅務規劃、家族信託、遺產規劃、家庭成員嘅保障以及子女升學嘅發展。
Topaz 嘅成功主要基於兩大元素。第一，我哋根據客戶嘅需求，提供量身訂造嘅投資組合。投資管理服務涉獵1級同2級市場投資，包括私募股權、固定收益、對沖基金、環球證券同埋期貨等嘅領域。
Topaz 作為香港家族辦公室嘅前線，我哋好榮幸成為 Family Office Association Hong Kong (FOAHK) 嘅聯合創始委員。
Hello, we're back to the presentation. Next, the 11th team is Risco Trader from Hong Kong. The teams implement bit-by-bit policy and buy low strategy to maximize profit and minimize loss, together with the usage of time series and exponential smoothing model for forecasting to ensure accuracy, value at risk for risk management purpose to limit the maximized loss. Risco Trader, please unmute yourself and share your screen. And you have 4 minutes to present. You may start now.
Okay, good afternoon, everyone. This is the team Risco Trader, and I am Manix, and I will introduce our trade in the following few minutes. Our portfolio consists of the best performed coins and coins with special functions together with coins with active day trade. Each currency does not comprise greater than 10%, and there is no buying on margin or short selling. Our trading logic comes with 3 elements. The first would be stop loss, preventing huge losses when the currency price drops by 5%. And the second would be bit-by-bit policy, to buy or sell a small proportion when the price change is less than 5%. The third would be buy low strategy, in which we buy currencies when the price stops falling and tend to increase. We derive these mentioned logics because experience tells us cryptocurrency is usually unstable. Upsurge and downturns can happen on the same crypto within a short period. Therefore, we assume the crypto is unstable and does not have a stable price, and we further assume that upsurges and downturns must happen and the price trend of the crypto follows past data. It can be referred to the greater fool theory. This theorem tells us with the existence of mispricing, we can guarantee a certain amount of return with bit-by-bit policy in a price range. We use value at risk for risk management purpose, and we find the loss distribution of the target according to the historical data and calculate how confident we are about the loss in the upcoming future to be within 5% interval. We sell the crypto if the confidence level interval is greater than 80%. We adopt the historical data in forecasting. The first 4 days of each week are training data, and the last 3 days are holdout data. Our first model used the time series analysis, which is to calculate the 4-day hourly moving average, centered moving average, and ratio to moving average to obtain the hourly index. We then normalize the results to obtain the forecast value. We sell crypto if a negative value is obtained. Our second model uses exponential smoothing, where alpha is determined based on the training data sets between 0 and 1. We sell crypto if a negative value is obtained. We achieved the third in rank in December and record a live return of 9.84% until the 28th of December. This is the end of our presentation. Thank you.
Thank you, Risco Trader presentation. And now we move to the Q&A section. Judges, you may begin. Any judges have a question to the team and can unmute your mic to ask.
Excuse me, I have a question here. Okay, in your stop loss strategy, you use with the 5% level, but as you mentioned in your PowerPoint, okay, you say that the crypto market is quite volatile. Based on the volatility of your market, will the stop loss always on, okay, in your trading strategy?
I think the 5% is more like something we obtain after testing and optimization based on the cryptocurrency we focus on. And this may not be work if our target swap to other cryptocurrency, but at least for our target, as mentioned in the second slide, we have tested that the 5% is enough to handle the situation. But as I mentioned, if we try to apply the model on other currency, then it might not be always work. The stop loss may not always work.
Have you tried other currency, like with the less volatile one, okay, like the Dogecoin or some others?
We actually eliminate these from our choice list where at the beginning of designing our model, like we thought these are not the best currency or not the most suitable currency for our model or algorithm, and that's why we didn't include them in here.
Okay, I see. Thank you.
Okay, thank you. Any other question to the team?
May I ask a question? So, both on your backtesting and the live performance, what's the maximum drawdown that you experience using this stop loss strategy?
The maximum drawdown we have experienced. I don't think I have the data right here. Actually, I'm not sure what is the maximum we have experienced, but it is pretty hard for me to answer your question right now because I didn't save the data in the PowerPoint here. So it might require me to, search for our data in the platform, and maybe I can email you later.
Okay, that's fine. But can you remember? Was it large or was it moderate?
I don't think it's large because it's like a moderate level, as I remember, but I just can't tell you the exact value here.
Okay, thank you.
Thank you. Any other question?
Just observation. Since the return you show us is the December one, I mean, when we are currently looking at the current returns, what do you think goes wrong?
Actually, there is some human error happens to our model or when we are operating in the platform, and that's why our final live trade result is relatively poor. So the live return results happen before our human error due to some, we have accidentally, click something wrong. So I don't know if we didn't make the human error, will the live return still, have this level, but yeah.
Would you want to explain about what human error has happened?
When we are trying to, program our models, and I think according to what I have heard from our programmer, he have just pick some wrong option, and then the live return drop.
Okay.
Okay, thank you for the question from Mr. Jason. Maybe this is the end of the Q&A section for Risiko Taka. Judges, please write down your score for the team. And also, thank you for your presentation, Risiko Taka. Next, the 12th team is Rise from Hong Kong. The team implement a vector autoregressive model for on-chain momentum with long-short action based on average true range and relative strength index. Rise. Please unmute yourself and share your screen. And you have 4 minutes to present, and you may start now.
Can you see me? I'll share my screen.
Sure. Yeah. Yes. We can hear you and see you.
Okay.
You can start when you're
I'll start now. Okay, so good afternoon, everyone. I am Harry C. from Team Rise, and I'll be pitching our trading strategy today. Our strategy is called Factor Autoregressive Model from On-Chain Momentum. Our strategy is based on using signals from on-chain data to detect fundamental momentum in price. Cryptocurrency is a medium of exchange, so its value comes from transactional demand and usage. We aim to capture such signals through a machine learning model. And I'm proud to say that our model has achieved a high live return in the last 2 months, despite the poor performance of cryptocurrency. We believe our system can have a high ability to capture alpha compared to technical analysis, because our model is based on science and mathematical models. Now, I will explain how our training system works. Our system only trades on the best signals from on-chain data. First, the machine learning model used is the factor autoregressive model. It is a multivariate time series model which quantifies relationship between time series. We use on-chain time series to predict the next closing price. Second, we use Ethereum because this is one of the most traded and liquid coins, even though its price has dropped recently. As seen in the CME Ether futures graph, even though the price has fallen, the open interest is continuing to increase. Also, for the frequency of trading, we use a prediction period of 1 day, while minute level data is used. And we use this model to calculate the price delta, which we define as the absolute difference between predicted and current price. And what do we mean by trading only on the best trades? We isolate the strong price delta, which falls under the first 10th percentile during the backtesting period. And this is how we select our inputs. And to minimize multicollinearity, we choose the 3 inputs which has the lowest correlation with each other. Also, to convert data to stationarity, we first use an ADF test to test the stationarity, and then we convert them by using the first difference natural log value of each series. As you can see in the second graph, the time series are stationary. And this is the equation that we calculated using the Python stats library. And we calculate the optimized lag ordered of 1. And on the left-hand side of the equation, you can see the price delta. And there are 2 stop losses we use to control loss and risk management, which are the portfolio-based stop loss and the volatility-based stop loss. For portfolio-based stop loss, the entire model is stopped when the maximum drawdown in the backtesting is reached. And for the volatility-based stop loss, we use ATR to calculate the buy level and the stop loss level. And now I'll analyze our performance during the live testing round. We have demonstrated strong outperformance with our strategy, despite being in a crypto market downturn. We had a 150% annualized return, 1.63 annualized Sharpe ratio, and 51 trades entered in 61 trading days, which shows that our strategy is quite active. The equity curve, as you can see on the right-hand side, we outperformed Ethereum significantly. Our strategy is not affected that much by downturns, but we outperformed during price upturns. This might show that our strategies capture positive signals better than negative signals. In the second graph, in the daily returns distribution, you can see that our daily returns are more focused on 0% to 2% per day. And in the capital usage graph, you can see that our strategy entered a lot of trades in late November and early December, while being able to take profit after a large gain in mid-December, as seen that the capital usage bounced back to 100%. And this is the end of our presentation. Thank you.
Thank you for your presentation, and now move to the Q&A section. Judges, you may begin. Any judges want to ask the question to the team Rise?
I'm just curious, what is your backtest result? I mean, when you actually deploy this before your actual live deployment?
I don't really know that much about backtesting results because we use Python, our own library, to backtest it. So we didn't actually use the Algo gene to do our analysis. But for our own backtesting results, we calculate a Sharpe ratio of around 1 to 1.2 to 1.3 and a lower return from the live testing returns. It might be because that the market downturn in the beginning of this year is more serious than during the live testing round. So yeah, that's the results of our backtesting round.
So would you say that your algo works better in extreme situation, or it can ride across different time periods?
Extreme situations, because our system trades on fundamental signals from on-chain data. So during extreme signals, we hypothesize that if the speculation demand for crypto is way higher than the transactional demand, it's going to cause our strategy to not perform as well as before. As you can see in the equity curve, we perform better during price upturns than price downturns, which may be due to that fundamental signals drive price upturns more. But we have different risk management and stop losses to prevent this kind of stuff to happen. And that's why we implemented the portfolio-based stop loss to try to minimize the impact from extreme situations.
Okay, thank you.
Thank you, Mr. Jason. Any other questions from the judges?
Got a question here. I wonder if you do the regression using the price change and factor change, or just the factor absolute value with the price absolute value.
We use the model to calculate the next closing price, not the change in price. And yeah, if you refer to this equation, we actually it's not the equation that we directly got from the model. We change it a bit. For example, we change the close t-1 from the right-hand side to the left-hand side, and that's how we calculate the price delta. So the dependent variable in our model is not the change in price, but rather the next closing price.
Okay, thank you.
Thank you, Mr. Kelvin. Maybe this is the end of the Q&A section for Rise. Judges, please write down your score. And also thank you for your presentation, Rise. Next, the 13th team is Shiba to the Moon from Hong Kong. The team utilized a mean reversion strategy, which use MACD signal to trigger long-short decisions. This signal gets filtered with Bollinger Bands. Only if the standard deviation between the buy and sell signal exceeds 10%, then the algorithm will execute the decision. Shiba to the Moon. Please unmute yourself and share your screen, and you may have 4 minutes to present, and you may start now.
Yeah. Hi, this is Team Shiba to the Moon, and we'll start our presentation. So this is general flow of slide, and this is basically summary of our trading strategy, which is based on MACD and Bollinger Band. First, we'll receive the buy signal from the MACD golden cross. Then on the dead cross, the algo will assess whether it is the right timing to sell. And third, we'll filter the sell signal using the Bollinger Band. And if the third criteria is satisfied, then the algo will execute the sell order. So the overall, just a trading idea. So why BTC is, it is showing that the majority of the crypto follow the price trend of the BTC as shown in the graph above. And also we ran a regression test and found out that the movement of the cryptos were highly correlated on average at R² of 0.7, 0.8. And why Bollinger Band is because we want to react to the volatile market with huge upward and downward price fluctuations. And we'll sell if standard deviation of sell signal is less than 5% or greater than 5% of the standard deviation when we initially bought the cryptocurrency. So how the algorithm will execute the buy and sell is that we'll buy on the golden cross and sell if the condition meets the criteria of MACD dead cross and the criteria we mentioned previously with the Bollinger Band, or if the current price is 120% above or 95% below the initial price. And with the risk management, capital management, I think we see a repetition as a huge risk factor that can have huge impact on the price of the general cryptocurrency market. So to reduce this risk from different crypto, we specifically chose to trade on BTC because they're less volatile than other minor ones. So our trading method is we buy 100% and sell 100% of the tradable asset per trade to protect our capital from additional variables such as a foreign exchange risk. We only trade BTC to USD. So our test results and adjustments. So on live test, our win rate was 53%, while our NAV change was minus 16%. So the trial case, so the sets of conditions we used on the live test was quite invalid, I think, due to two reasons. First, I think is the insufficient initial capital of $20,000. And second, the setting the price level on the buy command. And so we made a couple of adjustments. And we conducted the multiple tests on our own platform, and on all tests we beat the market. However, on the live test, results showed the otherwise. Therefore, we investigated the reason why and found out it was due to lack of initial capital. So we only adjusted this initial capital to $50,000, and it has huge change with the result, which the NAV improved from minus 45% to 3.5%. So applying these kind of changes to the live test, I think we'll expect to have some improved results with our, And so we set the strategy to sell at the most optimal moment. So the both golden and dead cross of MACD indicate the bullish and bearish signal of crypto. So we buy during bullish signal and sell at a bearish signal. And Bollinger Band signal makes sure that we take more disciplined trading decisions, and satisfying the following criteria, we make sure to buy and sell at the most optimal moment. Yep, that's about it. Thank you.
Okay, thank you for your presentation. Now we move to the Q&A section to the team Shiba to the Moon. Judges, you may begin. Any question, judges? Any judges have the question to the team Shiba to the Moon? If no more question, maybe the Q&A section to the team Shiba to the Moon is end. And judges, you can write down your score for a team now. And also thank you for your presentation. Next, the 14th team is Super Traders from Hong Kong. The team utilized double strategy, MACD plus RSI DCA, with portfolio optimization on different cryptocurrencies. Flexible target profit ratio and capital allocation are implemented according to the realized and unrealized profit and different indicator analysis. Super Traders, please unmute yourself and share screen. Yes, we can hear. You have 4 minutes to present and you may start now.
Okay, so hello everyone, I'm Kenny from Super Traders, and there are totally 4 members in our team from different majors like economics, accounting, computational finance, and financial technology. And basically for our trading ideas, we have 2 strategies. The first one is the MACD plus RSI, and which provides a double verification for buy-sell signal. And it is the main strategy of our trading ideas, so more capital will be allocated here. And also the second strategy is the dollar cost average, which is DCA. So this strategy could help us to lessen the impact of volatility of cryptos. And it is executed for every 12 hours, and there's no short position for this strategy. And also we have portfolio management in our strategy, and we use the Python module called PyPortfolio Opt. And this our portfolio optimization will be executed for every 3 days. and according to their past performance in the past few days. Also, for the risk management, we have ATR stop loss, and here we set the ATR multiplier to be subject to change from 2 to 4. So let me give you an example. If we are making profit, so we will set a higher ATR multiplier because we realized the profit. So we are more risk tolerant to accept a larger risk, and vice versa. And below are some calculations of stop loss price with both long and short position. And for capital management, our initial capital is $1 million US. And as mentioned before, we allocate about 65 to 80% of total available amounts for MACD and RSI. And for this year, we spend around 6,000 per day. And for the percentage of capital allocated in each cryptos, we use the optimized portfolio weights to be the percentage of capital to buy or short the cryptos. And if you look at our backtest and live performance, the white one is the backtest results. If you look at the net asset value or like the Sharpe ratio or like the overall scores, it is okay, right? But in our live performance, we did not so well. We made a loss here, and our team has concluded some possible reasons. And the first one is the breaking news, like the bankrupt of FTX. And actually, there is another news about, but I forgot what facilities are being attacked by the hackers. But the price of Ethereum has dropped dramatically, and we have a very large position of Ethereum. So that might be one of the reasons. And for the second reason, it might be the wrong buy-sell signal here. Actually, our strategy is not perfect enough, so we should make a lot of improvements here.
40 seconds.
And so, yeah, so last, we would like to appreciate the organizers for organizing this event. We have learned a lot here. And this is the end of our presentation. Thank you.
Thank you, Super Traders. And now move to the Q&A section. Judges, you may begin.
Excuse me, maybe let me try to ask a question. Okay, in your portfolio, okay, so you use the macro risk portfolio to do portfolio optimization. Okay, so maybe the first question is, what's the constraint of your portfolio? Is just the Bitcoin and ETH only, or involve other currency?
Well, there is totally 6 currencies in our portfolio, which include Bitcoin, Ethereum, also the Atom, ADA, and and others. Yeah, totally 6. And okay, we use the portfolio optimization to optimize the weight of these 6 currencies.
So in the macro risk portfolio, okay, actually it involves the long and short, the corresponding constraints, okay, or currency. But in the cryptocurrency market, how do you short the currency?
Well, I remember there is a option for in the backtest system. We can short the currencies, and we look at the records, the transaction records. Actually, it works well for short. Yeah.
But in the real market, okay, if you trade in the exchange, okay, like the Kraken or the Coinbase, how do you short the cryptocurrency in the real situation?
We can choose not to short in those exchanges, but it just provides us a choice here. Yeah.
Okay.
Yeah, it is not as necessary to short.
Okay, thank you.
Thank you, Philip Leung. Any other judges have the question to the team Super Traders? Maybe no more. just thank you. And the Q&A section for super traders is end. Judges, please write down your score. And also thank you, super traders. Last but not least, and the fifth team is the Pirate King from Hong Kong. The team operates under the Ichimoku Cloud Investment Portfolio Strategy, implemented by grading different types of line crosses and line distance ratio, which include Tenkan Sen, Kijun Sen, Cloud Span A, and Cloud Span B. The Pirate King, please unmute yourself and share your screen. You have 4 minutes to present, and you may start now. Please unmute your mic, maybe. No sound for you. Maybe you need to choose your mic to choose the mic. We can't hear. Yeah, we can hear. Maybe you need to choose your mic in the Zoom. No sound. We can't hear. We can't hear. We still can't hear. Maybe you re-enter. Re-enter. We wait you a minute. We are waiting the Pirate King coming back.
Hello, can you hear me now?
Hello. Yeah, we can hear.
Sorry for the
Thank you.
technical issue.
Okay, you can start your presentation.
Thank you. So I am Ian from the team Pirate King. So today I'm going to talk you through the Ichimoku Cloud trading strategy. So let me firstly show you how Ichimoku Cloud looks like. So a typical Ichimoku Cloud is having 4 components, including the cloud, the average of different period high and period low, and the stock price, the crypto price, and the lagging span. So it can tell us about the trend, the momentum, and the resistance level. So I use these 3 indicators to make our the trading algorithm, and it is a very simple one. So here are some kind of buying signals and selling signals I choose. For example, here you can see the crypto price went through the Ichimoku Cloud. It means a strong indicator telling us the crypto price will went up. And for example, here the blue and the red line crosses each other. It tells us changing direction. And for example, in here, the crypto price went through the Ichimoku Cloud. It is some kind of resistance, and the price will fluctuate in between them. So it may be some kind of position that you don't want to make any decision and to wait to see what will happen for a few days later. So through different kind of line structure and different shape, we have created some kind of unique score for each cryptocurrency. So I would choose the top 5 scorer every day to trade for them. If they are above the cutoff score, I would use 25% of my available balance for the trading. And after some kind of experimenting, I've tested it at 9% for the trading loss and holding 12 days at maximum. And I also doesn't include some kind of short selling. So here are the backtesting results for 3 years. As you can see, in 2019 and 2020, I earned some kind of profit. But does backtesting actually tells all the story? But I would say it doesn't. For example, in 2020 to 2021, the crypto price actually increased a lot from, for example, Link USD, it increased from 1.76 to even $12. So basically, you can't lose any things in that year. So how can I say my trading strategy actually works? So I compare some kind of information online. I drop down the market data of different quarter at the beginning of the quarter and the end of the quarter. So I calculate the quarter return. So I compare through the different quarter return and shows that my algorithm actually performed quite well, including 60 to 70% of the time I can, most of the time can outperform 60% to 70% of the market. So, and also for 1 year span, I also outperform 85% of the crypto returns. But that's the reason, for example, in recently, about the FTX, the crypto market doesn't perform well. I didn't actually make a profit in my competition, but I still believe it outperformed most of the
30 seconds.
And I think it is quite a stable method and a quite stable algorithm trading strategy. Yeah, thank you.
Thank you for your presentation. And now we move to Q&A section. Judges, you may begin. Any question to the team, Pirate King? If no more, maybe thank you for your presentation, and the Q&A section for the Pirate King is end. Judges, please write down your score.
Thank you.
And that sum up all the presentations for the day. Thank you to all the teams. Judges, will you please use this time to write your final score and votes for each team? Let's take a short break and we will move on to our next part of the event.
This year, almost every industry chose blockchain technology to reshape the digital economy in 2020 and beyond. Weaving blockchain into the fabric of your business currently comes with a lot of headaches and a massive price tag. Most businesses soon find out that most blockchain applications are hard to implement, expensive to maintain, and difficult to use. Your business needs a simple, surefire way to unlock the technological and financial benefits of blockchain. Say hi to FIO. FIO democratizes blockchain use for conventional enterprises of any size. We flatten blockchain's steep learning curve and technical investment to help you pay only for what you need. FIO was made for non-technical users like your employees. Just connect your data via our API or even a spreadsheet. Our backend system is so intuitive and simple to configure. FIO helps you manage and cash in on diverse fields such as AR financing, payment processing, intellectual property rights, loyalty points, rating systems, and the provenance of high-value goods. Our affordable subscription, starting from only a few dollars a month. Use our flexible, customized, pay-as-you-go options to scale as you grow. Start the new decade with 2020 vision and a head start over your competition. FIO helps you unlock new opportunities with blockchain fast, cost-effectively, and as simple as possible. FIO, giving your business the building blocks for tomorrow, today.
邁向10年發展 ，Topus 由最初照顧 Single Family Office (SFO) 到今日嘅 Multi Family Office (MFO), 一直以嚟，我哋都為家族辦公室客戶、高淨值嘅私人同埋機構客戶提供全方位嘅財富管理、風險管理以及家族傳承等等嘅服務，致力保障家族財富，同時亦做到財富增值同財富傳承。
Topus 由創立到而家嘅定位一直非常清晰。我哋係以家族資產嘅長期利益同埋發展作為終極使命。Topus 嘅家辦服務團隊包括律師、會計師、投資經理同埋升學顧問，提供稅務規劃、家族信託、遺產規劃、家庭成員嘅保障以及子女升學嘅發展。
Topus 嘅成功主要基於兩大元素。第一，我哋根據客戶嘅需求，提供量身訂造嘅投資組合。投資管理服務涉獵1級同2級市場投資，包括私募股權、固定收益、對沖基金、環球證券、 同埋期貨等嘅領域。
Topaz 作為香港家族辦公室嘅前線，我哋好榮幸成為 Family Office Association Hong Kong（FOAHK） 嘅聯合創始委員。
知道 Invest Talk 有好多你哋中意嘅股評人，多謝你哋嘅支持。記得收睇節目之餘要訂閱喎，你哋嘅每一個訂閱對我哋幾個小編都好重要，俾 like， 撳埋訂閱同埋隔離個鐘仔，就唔會錯過我哋盡力製作嘅片段。記得訂閱啊！知道 Invest Talk 有好多你哋中意嘅股評人，多謝你哋嘅支持。記得收睇節目之餘要訂閱喎，你哋嘅每一個訂閱對我哋幾個小編都好重要，俾 like， 撳埋訂閱同埋隔離個鐘仔，就唔會錯過我哋盡力製作嘅片段。記得訂閱啊！
Ladies and gentlemen, we will now announce the winners of our Algo Crypto Trading Challenge there will be 3 awards categories: Best Return, Best Sharpe, and Best Strategy Design, and first, second, and third place in each category. Teams can be winner in more than one category. Now, let's show the finalists out of sample backtest results. Let's see the result for the backtest. And the period is from November 2021 to the October 2022. Let's see the result. Oh my god, Lazy Chicken suddenly drops a lot. In the meantime, another team rise up. Who's that? It's Dolphins. Let's the result going. Dolphins still on the top. But suddenly, Dolphins is dropping and Invin execution is climbing up. The Sharpe ratio of Invin execution just exceeds 3. Impressive. Invin execution continues its leading position, while Super Traders and Dolphins are fighting for the second place. It's almost at the end of the out-of-sample backtesting. Super Traders and Dolphins are very close to each other. Who can be the final winner? Alright, the results come out soon. Oh, the results have come out. This is the backtest Sharpe ratio for each team. The out-of-sample period is from 1st of November 2021 to the end of October 2022. Now, we will announce the best Sharpe. The third place goes to Okay, let's move to the result for the best Sharpe and the winner and the third place and the second place going on. The third place goes to the Super Traders from Hong Kong. The teams use double strategies, MACD plus RSI DCA with portfolio optimization on different cryptocurrency. Flexible target profit ratio and capital allocation are implemented according to realized and unrealized profit and different indicator analysis. The Sharpe ratio on the out-of-sample data is 1.55. Now, the second place best Sharpes goes to Dolphins from Hong Kong. The team used micro take profit strategy with long-short action based on moving average. The Sharpe ratio on the out-of-sample data is 1.9. Now, the first place, which means is the winner of best Sharpe, go to Invin Execution from Hong Kong. The team used pricing strategy based on the technical analysis of moving average, convergence divergence indicator, and channel momentum oscillator together with the help of other statistical tools, historical news data, and Google top search result. The Sharpe ratio on the out-of-sample data is 3.29. Congratulations to all the winners. All right, Now, we are going to present the Best Return Award. Our finalists have paper traded their algorithms in a live market environment for the period of 1st of November to the end of December. Now, let's see how the finalists Algo performed in the past 2 months. And this is the Best Return Award. We are waiting the result coming out. It is a 2 months live paper trading from 1st of November 2022 to the end of December 2022. Wow! In-fin execution suddenly drops a lot, but it rebounds on and then drop again. In-fin execution looks very violent. How about the other teams? Rise up. Can it continue to knit? All right. It's come to the end soon. And the result comes out. That's the result of the best return for the past 2 months. Now we present the winners of the Best Return Award. And the first place goes to Bovins from Hong Kong. The teams use micro take profit strategy with long short action based on moving average. The return on the out of sample data is 9.4%. Congratulations. Now we move to second place. Best return goes to In-fin Execution from Hong Kong. The team pricing strategy based on the technical analysis of moving average, convergent divergent indicator, and Chandler momentum oscillator together with the help of the other statistical tools, historical news data, and Google top search results. The return on the out of sample data is 12.6%. Now is the winner and the first place of the best returns goes to Rise from Hong Kong. The team used Victor autographic model of on-chain momentum with long short action based on average true range and relative strength index. The return on the out of sample data is 25.1%. Congratulations to all the team. Now we move to the last part. Thank you. And we will have the prize presentation of the best strategy design of the Algo Crypto Challenge 2022. And this is the judges give the score to the team. For the best strategy design, third place goes to In-fin Execution. Thank you very much. And then we move to the second place. The second place best strategy designs goes to CrazyCon. Congratulations to you. Now, the winner of the best strategy design. Who will be the winner today? And the first place goes to Rise. Congratulations to you. And the team of Rise used the Victor autoregressive model for on-chain momentum with long short action based on average true range and relative strength index. Congratulations to you, and you will be the winner today. We have now come to the end of the competition. On behalf of the organizing committees, we would like to thank you joining us in this afternoon. We would like to express our sincere thanks to all the judges, sponsors, and finalists. Your support has made this Algo Trading Challenge a success. Congratulations again to all the winning teams. We will contact the winning teams very soon. Thank you very much. Looking forward to seeing you next year. Bye-bye.